What's up everybody? Welcome to the Stocks channel. My name is Corey and today we'll do macro technical analysis and we'll look at all of the indices, the VIX and Bitcoin, and we'll also look at ARKK. So first up, let's take a look at a weekly chart of the SPX S&P 500 index. So let's crack open this chart and see what's going on in the stock market today. Alright, so on the weekly chart of the SPX, we can see that we did have a very volatile week and we did close with sort of a doji looking candle. And intra-week, we did test that critical support level at the weekly 20 simple moving average. And intra-week, we started to push to new highs, but eventually closed down below the 5 EMA. So this is exactly what you would expect to see at this current condition in the market, because the market is trying to decide if it's going to break down and see a correction through price, or we're going to continue to go sideways before we see a breakout and a run to new all-time highs. So the first thing I want to start today's episode with is explaining stock market corrections. You can either get a correction through price or you can get a correction through time. So if this green line from left to right represents the fair value of the stock market, if it were rational, it would just go up in a linear fashion and it would increase by the same exact amount every single year. We know that's not the case because humans trade the stock market and humans are emotional, filled with emotional swings from greed to fear and then back to greed, and the cycles just continue to repeat. So if the stock market price action looks something like this, eventually the stock market will get overvalued and can go through a correction through price where you'll come back to the mean or possibly even below it. And then eventually that fear cycle will go back into another greed cycle. You'll eventually see way too much greed and way too much optimism. And then the stock market can also correct through time where it just goes sideways. And you can see as I go sideways here, I'm catching back up to the mean without going through a major correction through price. And then we can still continue to go higher. So you either get a correction through price where you see a sharp decline in price back down to the mean or below it, or you get a correction through time where you sort of just chop around and go sideways. And either way, these are both still corrections, and either way, we both still end up at the same exact spot. So whether or not I get a correction through price and I come back up to the mean, or I get a correction through time, you can see that either one ends up in the same exact location. So don't forget, the stock market doesn't always have to correct through price. The reason I'm bringing this up is because we may have just seen a stock market correction and we didn't necessarily notice it because it was all going through time and not necessarily just through price. So looking at this weekly chart of the SPX, we can see the last bullish breakout we had was back in November of 2021, and then we did have a little bit of a breakout at the end of December. But if you just draw a horizontal line from November at the high all the way across, you can see that price action is currently below where we were in the beginning of November or the end of October. So if you look at a correction through time, we may have just seen one. From the high all the way down to the low, we were down about 5%, but more importantly, the stock market has gone absolutely nowhere for almost 3 full months now. So don't rule out the possibility that we've just gone through a 3-month-long correction and you may have not even noticed it. The reason I bring that up is because we are holding above support and we still have a bull trend. So if we just went through a correction, the next logical thing to assume is the bull market is about to blast off and we will break out and start to run to the next leg higher. So if at any point you see SPX trading above 48.30, the next price target is all the way up there at 51.05. And if you cross that through the resistance trend line, that means we could see that price target by the beginning of April. So don't be surprised if the stock market is about to go on a face-ripping bull rally for the next couple of months, because that means we're going to see a very strong bull run all the way through February and March and see a new all-time high price target in the 5100s by April. Now, all of this is not true if we do lose this support level right around 45.35, because if we lose that level, we're more than likely going to see the correction through price, and the next leg lower would be right around 43.50. So you have very strong support right around this zone in the 4500s, and if we lose that support level, we're more than likely going down to the 4300s. It's really that simple, and don't necessarily get overly bearish right now because a lot of people are just assuming the stock market's going to crash. We're going to see a huge correction after earnings, and we're going to see a huge correction after FOMC. We don't normally talk about fundamentals here on this channel because this is a technical analysis channel. But if you want to get into fundamentals, you can really start thinking about the glass half full scenario where maybe an FOMC at the end of January, they don't mention raising rates in March, and maybe they even kick the can down the road. If you mix that scenario with a strong earnings and the fact that we've already had a correction through time, you can very quickly see how the stock market can go back into another extreme greed cycle, which means we will see a very impulsive face-ripping bull rally. If you pay too much attention to fundamentals and the people that just continue to say the stock market is too overvalued and can't continue to go higher, you're just going to continue missing out on a very impulsive bull rally. If you look at the technicals, you can very clearly see this is a bull trend, and you can very clearly see this was more than likely a correction through time. And if you have a bull trend and you just completed a correction, you can go right back into another bull cycle, which means we can continue to go higher. So if you're staying objective, you're bullish unless you see SPX breaking down below about 4,500, and you're getting extremely bullish coming off of this very critical support trend line, which if I zoom out here, you can see the support trend line has contained all dips going all the way back to October of 2020. This is not a bull trend that just started recently. This is a bull trend that's going into the second year, and you don't want to just assume a bull rally that's been going on for multiple years is going to break down. You want the price action to confirm it. So jumping over to the bear bull survey, you can see exactly what I'm talking about with there's just being too much bearish sentiment. You have 36% of the people that are neutral and over 38% of the people that are bearish, and now you only have about 25% of the people that are bullish. So just like I said, everybody is just assuming the stock market needs to go through a major correction, and there's even people out there saying the stock market's going to crash. When there's this many people sitting in cash or trying to short the market and you're still in a bull trend, the odds favor higher prices, and the odds favor a short squeeze and a FOMO rally of all of that cash coming off of the sidelines and buying into the market at higher prices. So follow the Stocks Channel IQ test, which is not panic selling at strong support levels in a bull market. You should be taking on risk at strong support in a bull market. If we lose the strong support, you take a minor loss and you move on, and then we'll lose the bull trend and we can adjust accordingly. So now that you can see how many people are bearish and neutral on this market, even though we more than likely just saw a correction and we're still above critical support and we're still in a bull trend, you can very clearly see how the stock market could go higher from here. So jumping over to the NDX weekly chart, we can see a little bit more weakness than we saw in the SPX. The NDX did close below a critical support level, which was right around 15,650, and we did close about 40 points below that level. We also closed below our 20 simple moving average, but you can see the price action did hold up above our support trend line, and this is a very similar trend line as the SPX going back to October of 2020. So just like I gave you in that example where price action can correct through time or correct through price, you could very clearly see this support trend line would be our trend going in a very linear fashion if the market were rational. We know the market's not rational, and we see a lot of greed followed by a lot of fear. Greed, fear, greed, fear, greed. And now we're going through another phase of fear where we see the market just correcting through time. And what do you know? We're back to the support trend line, even though we did not see a sharp decline through price. This is more than likely just a correction through time where we've been chopping around and going sideways, going back all the way from October to November of last year. And now we're back to the critical support level. So if you look at this as a correction through time, you could still assume that we're going to blast off from this level, go right back into another greed cycle, which would be another bull cycle, and still hit new all-time highs. So don't be surprised if you see the NDX in the 17,000s going into March of this year, and possibly even extending into April and beyond. Now, if we lose this support level, which is right around 15,350, we could come down to the weekly 50 EMA, which is right around 14,656. So don't just blindly assume we have to go into another bull market. That's not what I'm trying to tell you to do. I'm just trying to tell you to look at the glass half full and try to understand as long as we're above these critical support levels, we could be going into another bull cycle and we might have already seen the correction. So don't just assume the correction has to come through price, and don't necessarily assume we have to break down through support. If you're being objective, you're following price action each and every day, and you're only going to assume we're breaking down through support if you see the price action breaking down through support and confirming it. There's no room for guessing in a strong bull market. You can't get bearish in a strong bull market just off of a gut feeling. You need to wait for the price action to confirm it. So coming off of these levels, you can see we're still barely holding on to that bull trend. So a strong bounce from here will confirm the NDX is staying bullish, and we could see new all-time highs in the next few months. On the Dow Jones weekly chart, we can see that we had a very long correction through time where the Dow Jones has been chopping around going all the way back to April of last year, and we really haven't gone much of anywhere. So the Dow Jones needs a bullish breakout above about 36,330, and then we could start to run to new all-time highs, and it could be a very impulsive bull rally. You could see if I zoom in here, the Dow Jones clearly has a weekly bull trend, and the price action is clearly well above the weekly 20 simple moving average. So we have a strong support level down around 35,400, and we are well above that level. Our support trend line takes us back down to about 35,000, and below that we have another support level right around 34,465. So the Dow Jones has a lot of support and it really hasn't gone much of anywhere. So the next bullish breakout above 36,330 should take it to new all-time highs, and it should be very impulsive. We have the bull trend and we have price action well above support. So it could be very possible we're about to see a very strong bull rally in all of the indices across the board. In the Russell 2000, we can see the very similar sign as the Dow Jones, going absolutely nowhere and correcting through time, going all the way back to the beginning of last year. We did see that false breakout to new all-time highs and we came right back into the trading range, and you can see price action continues to bounce off of the support trend line, not yet breaking below it and not yet confirming we're going for the next leg lower. So in the Russell 2000, if the price action does start closing below about 2150, we could easily come down to the next leg lower in the 1900s, but until we break down, we can't assume that's going to happen. If we continue to bounce off this level and break back above about 2330, we could go to a new all-time high and we could see another bull rally. The small caps have by far been the weakest and have gone absolutely nowhere for over a year, so the next breakout to the downside or the upside is going to be very impulsive. So look for a bearish breakdown below 2150 and a bullish breakout above 2330. On the VIX weekly chart, we can see the VIX is still closing below 20, and we really need to see the VIX closing above 20 to see a correction through price and to see a volatile sell-off. If the VIX starts breaking out above 24 to 25, that will be a much deeper pullback, which will end up being a much larger correction, which is more than likely going to be in the magnitude of that 10 to 15%. Now, right now, it looks like the VIX is just chopping around after that recent volatility spike in last year. And right now, if the VIX continues to get crushed back down towards 15, you're going to see that continuation of this bull rally. So the VIX below 18 will be the next bullish breakdown, or the VIX above 20 will be the next bearish concern for a more volatile sell-off. On Bitcoin, we're currently trading around 43,000, and you can see on the weekly chart, we did lose the bull trend, and we are trading below the weekly 50 EMA. So this support level here right around 39,600 has to hold up, because if we break below that level, we're going to see Bitcoin coming back down to 30,000. Below 30,000, we could come back to 20,000, but right now we do know 30,000 was a very strong support level. So the bearish breakdown on Bitcoin is going to be down below 39,600, and it should be a very quick trip back down to 30,000. The bullish breakout will be back above 53,000, and above 53,000 we could go into another bull cycle, which does mean we could attempt to break out to a new all-time high. But I'm not going to get bullish on Bitcoin until we can at least get back above the weekly 50 EMA, which is right around 45 to 46,000. So right now on Bitcoin, you just need to be patient, because you're either going to get a bearish breakdown below 39,600 or a bullish breakout above 53,000. Everything in between is more than likely just going to be choppy, so you need to be patient to see where the price action wants to go from here. On the ARKK ETF, you can see we're down here around this very critical support level at $81, and below that we're more than likely going to see ARKK trending towards 70. This is clearly a bear market, and this is clearly a very strong bear trend, because on the weekly chart you can see that we have all the moving averages stacked to the bear side and a lot of bearish momentum. So I would not get bullish on the ARKK ETF until it can at least get back above 99. Otherwise, we're more than likely going to see prices to continue to trend lower down towards $70. So you need to be bearish until you see ARKK breaking back above $99. So to bring this all together, you can clearly see there's a lot of bearish sentiment in the market, and there's definitely a lot of people that are neutral, which means they're still sitting in cash. We more than likely saw a correction through time, and we're going into a very strong earnings season. So if we get a lot of strong earnings and we don't get a hawkish Fed, we could clearly go to SPX levels of around 5,100 over the next 2 to 3 months. Now all of that's thrown out the window if we get a bearish price action breakdown below about 45.35. So watch the price action and don't just assume we have to break down. There's a lot of signs pointing that we could go higher from here, and the technicals are clearly still bullish because we still have the bull trend. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that sends all of your buy and sell alerts directly via email and text message, and only trades the ETF TQQQ. You can see from this chart that Bank Trade Alerts beats the market every year, and even in a bear market like 2008 where everybody was losing money, Bank Trade Alerts made a very decent profit, making over 90%. So it doesn't matter where the market's going from here, whether it stay bullish or go bearish, Bank Trade Alerts is going to make money in either direction. You can find out all of the information about Bank Trade Alerts and how to subscribe by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.